Good afternoon, everybody. Good afternoon, everybody. This is Dennis Wilborn with the Active Trend Traders, and reporting from Nashville, Tennessee, is David Grandy from All About Trends. How you doing, David?
I'm doing terrific. How are you?
I'm doing excellent. This has been just an absolutely fantastic month. We've had just we are like we've already launched most of our premium offerings with the alerts and all that kind of stuff. I'm just really pleased. With the response for those, and I know that our combo deal that we've been working between All About Trends and Active Trend Trading, I hope everybody is appreciating and taking advantage of that. So you ready to get going? Let's talk about the this market. What's going on?
Let's do it. Sounds great.
Well, I got to make sure I have my drawing. I do. Okay, I have my drawing tools ready to go, and here we go. I want to remind everybody that what we discuss here is for training purposes only, and they're basically just observations of what both David, myself, Harlan, David's partner, are seeing in the market, and then applying what we're seeing to the individual systems that we trade. I want to remind everybody that it's always a great idea, paper trade whenever you're learning a new method or a new strategy. Paper trade it prior to the risk of your own personal capital. So I always like to focus in on, here's where we were last week, that should be 6/16, or 20. Great week, great month. The S&P, the ascent had slowed, it was extended with divergent indicators, and I'll leave everybody to read the rest of that. And it seemed like anything could be a downward catalyst on the market last week, and I think this week we saw a little bit of that taking place, but it didn't fulfill. The S&P has been in a trading range for the last 8 days. We have a very well-defined, we'll see on the chart briefly, we have a very well-defined level of support, a very fine, a very good defined level of resistance, and it's just kind of moved sideways for this week. The great news for the week is we had consolidation, but support did hold. NASDAQ, on the other hand, did break out of the over and above the year's high, and we're in territory on the NASDAQ that we haven't seen since the year 2000. And I just mention that because, well, it's a fact. Does it mean that the NASDAQ is going to fall out of the sky because we've reached back into those high levels? I'm not going to, no, I don't think so. But at the same time, it's just something to be, put in your back pocket to say, okay, we've moved higher, and it seems like, and we'll talk about that when we get to the individual charts. The Russell pushing higher, but the pattern on the Russell has been really sloppy over the past week. The outside influences. I was really surprised this week by the lack of market reaction to world events. We got a little bit of a sell-off, but buyers came back in. It's almost like there's almost a nonchalant attitude in the market about what's going on out there in the world. And you can determine for yourself whether that's good or bad. But let's take a real quick look at the market charts. As I was saying, the S&P did a great job of just kind of maintaining for the week. We found a support level across here, and a resistance level. It popped its head above it, and it just is now trading within that nice little trading range for the week. We put in a hammer-like pattern on hammer-like because it's not really hammer because it wasn't at the end of a downtrend on Thursday, and we just simply pushed up a little bit today. Looking on the daily or weekly chart, which is on the right-hand side here, we'll continue to watch this because what we may get going into next week. We've got a hanging man doji at a level of resistance. We've got the stochastic starting to turn over. So we may get another week or so of just sideways moving. One of the things to also consider is now that Monday is the last day in June. The institutions will finish up with their window dressings of what they have to buy, and so to balance their portfolios. And so we may see a little bit of an update or just a stagnant day on Monday. It still looks like the path of least resistance is at least a retest, and that's what I would be expecting maybe after Monday or Tuesday. We are still again, on the flip side of that, we could get a bounce above these highs and a run higher. Let's take a real quick look at the NASDAQ. So I'm talking about, we bounced out and we broke out above. It acted as a really nice resistance on Tuesday. Then we broke above this resistance area at 43.71 on the NASDAQ, and it has now pushed back up to the 4,400 level that it peaked at on Tuesday of this week. And so it appears as if it is, well, one, getting extended, but on a weekly chart, take a look at what we're seeing here. We're seeing a slight divergence in the stochastics. The momentum did pop higher. This 44.98 is where the resistance area from back in 2000, one of the resistance zones, begins. So we're approaching that. I could see the market continue to push up over the next few weeks and then go, we hit the end of July and potentially run into the summer doldrums, drop down so that we can get a run up going into the after the summer doldrums when we get into the end of September, first part of October, to get a nice little bounce. Russell? Russell, again, hanging man doji at resistance. This is the pattern I'm talking about. We have very large range days. We actually stopped out of a TNA position when we closed below the 8-day moving average and get an immediate reversal on that day it stopped out. But the pattern just isn't nice and neat the way we saw it here and the way we saw it here. We look for those nice and neat patterns because they're a lot easier to, one, trade, define where we want to get into a trade, and gives us a really great area of where we want to get out. That was not evident in this week's action on the Russell whatsoever. So, any questions on the market, guys? Okay, let me go over and cover a couple other things, and then we'll throw it over to Dave. Great week, great month. Here's what the active trend traders have done for the month of June so far. This has been updated. I've got income generating trades and then capital growth trades we've been covering and talking about on our Wednesday night market stock talk, our midweek market sanity check. So I've had a lot of questions by people asking Dave, what is going on with the income generating trade? And the income generating trades, what I do is I divide my position into two pieces. One for generating income and the second part for capital growth, and then we just grow the portfolio through the capital growth. And basically the income generating trade addresses three problems that I see in the hundreds of traders that I talk with, and it takes care and helps set some really good habits. One, I find that most traders, don't know how to win. They don't know how to take winning trades off the table. Secondly, is they don't know how to lose quickly. They don't know how to take losing trades off the table quickly. Nobody's really worked with them about how to be a disciplined trader. And utilizing the income generating trades really reinforces disciplines that don't take a lot of time to adopt, but it does take discipline. I have to check in on the computer between 6 and 6:30 to see what kind of alerts are out there. And the whole trade is set up for folks. And then finally, it addresses the issue of, I know traders who've been trading for like 10, 15, 20 years who still don't have written rules. And simply by adopting a set of written rules, such as either All About Trends or the active trend trading, it addresses those 4 issues, and the outcome, which I really appreciate, is greater consistency. So this information is all posted on the website, so you can take a look at that. And lastly, and I'll let you read this when you go review this video on the YouTube channel, and it just tells a little bit about, which I have not done yet, about a little bit about the system, the active trend trading system. Basically, we're just designed to equip traders who are still working for a living, and those who aren't, with a system that works well in any market condition. So with that, I'm going to pop over to Dave because he's got some great stocks to be telling you about today. David, you have the con, my friend. And folks, if you want us to be taking a look at any stocks at the end of this, please put the ticker, and then if you would, just put a little note on, are you interested in buying, or you're already in the stock and where you got into the position at. And I'll be quiet, David.
All right, thanks a lot, Dennis. That was well done as always, and I hope everyone can hear me okay. I'm coming from you remotely from Nashville. Took the family out for a trip in the Smoky Mountains, and then now we're in Nashville for my wife's wedding. Well, not my wife's wedding, but a wedding for a friend of my wife's. So anyway, it was a real positive week, I thought. I mean, consolidating and very positively. I mean, with the exception of Tuesday, we closed, at or near the high of the day each day, and the Nasdaq, I think, closed at a new high for since the new rally began. So those are real positives. Nasdaq's leading the market again. Russell's looking great. Even when we had some weakness on, like yesterday, leading stocks were still doing great. It looked like it was an up day with the exception of the indexes. So a lot of positive things. Dennis, you have 6,800 in gains so far this month. We've got over 5,000 so far. So between the two of us, it's almost $12,000 in gains in just 1 month. So it's definitely been a great month, and really validates the systems that we use. Another reason why we do this webinar, though, isn't necessarily for the money. It's for hearing of your success. We want you to be successful. We want you to hear what you're doing with your success. And we got this great letter from Greg, who is taking his parents out on a cruise to Alaska, using the funds that he's racked up, in the stock market from trading with us. So we love to hear this. We love to hear people being successful, and we love to hear it benefiting other people. That's what I do with the profits that I earn in the market, and it's up to you what you want to do. But that's part of when we talk about having a plan is, what is your plan when you're successful too? What are you going to, if you make $2,000 on a trade, what are you going to do with those funds? Spend some time thinking about that, because that ultimately will drive your profit-taking decisions. It'll drive your trading decisions, and it will be part of your overall plan, and it will help you be a better trader when you have a vision for what you're going to do with your success. So thanks a lot, Greg, and anybody else that's achieving great results with us, please send them along. We'd love to hear it. It really we spent a lot of time on this, and it's really helpful to us to hear of your success. That's really why we do it. That's the biggest shot in the arm for us, so we really appreciate it. Okay, so as we start off each webinar, 3 things you need to know: uptrends and how to trade them, downtrends changes in trends, and right now it's all about uptrends because that's where all the action is. And there's two types of uptrending patterns: the pullback off highs pattern, stocks that are in confirmed uptrends, pulling back in an orderly manner towards areas of support, and then they break above the mini resistance and take off. We've been talking for the last few weeks about Tesla. This is what Tesla looked like a couple weeks ago, and this is what it looks like currently. So again, we're looking for stocks that are pulling back and have made a significant move above an area of short-term resistance, and then off to the races. And so this is what Apple looks like currently. As you can see, it's in a confirmed uptrend above the 50-day moving average. It's pulling back very nicely, very orderly, very short-term oversold with the stochastics here. And all we need to see is a break above this pink line that would trigger our long side trade. We'd love to see it pull back, continue to pull back a little bit more. The bigger the pullback, the bigger the break typically, as you saw with Tesla. So that's what we're looking for. This is a current setup that you could go out and take advantage of right away. So the other uptrending pattern is the right side of the cup crossover. It's really a great way to buy leading stocks at lower price points. There's a pretty clear buy point. There's a pretty clear stop loss point. So they're really easy to trade. And this is what GasLog looked like a couple weeks ago. As you can see, it's forming a new base. It's building the left side here. This area in between the green and blue lines is the bottom of a cup, and then a break above the green line is the right side of the cup crossover, and you can see that's what GasLog exactly did. It didn't take long for it to build its right side. It was only, I think, 5 days long, and it's been off to the races ever since, and no looking back. So this is exactly the type of alternative entry point we're looking for. Why would I want to buy it up here when I can buy it down here? And it's not, so I can get 4 points, a 4-point discount on my buy price so much. It's more of, by buying down here, I'm buying much closer to areas of support, whereas up here, I'm buying it after it's made almost a 20% move, and support is, very far away. And should it pull back, it could pull back 8% and still be in an uptrend, still be intact, and then I would be stopped out. But yet, if it pulls back 8% down here, well, it's going to most likely break some support levels here. So now I'm selling based on technicals versus selling based on price, and that's really the biggest difference between what we do and other systems is we use the charts to tell us when to buy, and we use the charts to tell us when to sell as well. It's not just based on price. So here's another current setup that could trigger any time. Myriad Genetics looks just like GasLog did a couple weeks ago. So we have a left side of the cup, and now we've got the bottom being built out, the green line, a break above that is your alternative entry. And again, you can see there's, should a break above that, well, you can use the green line as your first level of support, and then you've got the 50-day moving average not too far behind it. So you've got a couple areas of support here that are really close to your buy point. So, it's pretty much the same as the past few weeks. All systems go. We'll just continue to take advantage of these long size setups as they come to us and trigger, and then we're just going to manage the overall trend of the stock from there. How to contact us, allabouttrends.net. You can send us an email, give me a call. That's my personal number. I welcome your calls and love talking about stocks, so please do. We do have a 15-day free trial. It's really simple. You just go to our site, give us your email address that you want the newsletter sent to, and we'll be more than happy to send it to you for 15 days. There's no credit card or anything required. And we've been talking about this for the past few weeks, and we've had a really great response to this. And as a result, I'm not sure how long we're going to keep offering this. So if you want to take advantage of this, the time to do that is now. MarketStockTalk.com is the website. It's a combination subscription to both All About Trends and the Active Trend Trader newsletter. You get both of our newsletters for $49.99. If you went and bought both of them separately, you'd be paying twice as much. So you get both newsletters for the price of one. And we've also added a couple of different bonuses. You're going to get a PDF that's 4 steps to consistent profits in the stock market. That's going to be from us. And then Dennis put together a really nice special report, bounces or breakouts, dissecting the strategies for each, and that's a free video. And both these things you can't get anywhere else. They're your added gifts, for as our thank you for coming on board and doing the combination subscription. Though they also do a really good job of outlining in more detail who All About Trends is and what we do and how we do things, and the same thing for Dennis and Active Trend Trading. So they really set a good benchmark for the materials that you're going to be getting from us going forward. So really encourage you to take advantage of this. We haven't decided when we're going to pull this, but we have had a good response, and if you want to take advantage of it, this is the time to do it. So that's about all I have, Dennis.
Thanks, David. And somebody asked a question about Dash for Cash. I don't know very much about Dash for Cash, other than I know that it is another service that you provide. And what I'll do is I'll refer the person directly to you to get information about that, if that's okay.
Sure.
Okay, cool. Hey, one of the things, I know I've read David's report, and it's a really great report here that we're offering as a bonus. Part of the video that I did is, I've read a lot of places that why do you want to use alternative entries? That they're riskier than breakouts. They, why risk? Why take a risk for just a few percentage points extra gain? And so what this does is it goes back and shows the research on to figure out is that a factual statement, or is that fact or fiction? I think it might surprise you what you find out. So I'll switch back.
Yeah, and that's just to reiterate, that's not why we buy stocks at alternative entry points, to save a few percentage points. It's because we want to buy stocks that are making technical moves that are telling us to buy, number one. And secondly, we're buying them closer to support than we are if we wait for a breakout, where typically support is nowhere near the buy point.
Yeah.
And then if we get stopped out, our stop loss is going to be much lower. It's only going to be a few percentage points, because that's where support is typically. So, and that's the real key to making money in the market, is letting your winners, taking advantage of your winners, and then keeping your losses really, really small. Because when if you take an 8% loss, you have to have a pretty good gain to make that up. Whereas if your losses are only a few percentage points, it doesn't take much to get back into the green. So.
Yeah. Well, Dave, I really did that. I did the research and went back over a 10-year period and just did the research on it. I was just really kind of, I don't know if I can use the term, I was pissed off, because I actually just used it, so I guess I can. Because when I would go to various meetings, people are saying, "Oh, that's so risky. That's so risky. That's so risky. You got to do breakouts. That's the only way to go." And why? And I just basically going, "Wait a second, is that the absolute truth?" And so anyway, I'm not going to talk about it anymore, because we'll give away the ending, or if we haven't already. But so hey, I know you guys had on your list MasterCard. MasterCard, I just want to really hit this. David and I really pride ourselves in basically we give away at least a couple of picks per week on this webinar, and I'm liking the setup on MasterCard. Yeah, pulled a little bit further back below the 50 days than I would like, but it's setting up a really nice candle pattern at a nice support level. You got a bullish engulfing today. We got a spinning top doji on the weekly, And so we'll see if this puts in a higher low and then bounces higher going into next week. A couple of the other ones that we're watching for potential setups, we did get into Palo Alto Networks this week on a breakout of the little flag that was down here, and it has run into resistance at the 82. If we break above the 82, we'll be setting the income generating trade, because if it breaks above the 82 based on the measurement from 58 up to approximately 80, I think that's 22 points. It could run a measured target up another $22, and so we might set the income generating trade about half of that. YY? Also, similar type of breakout. If we pull back above this, it's almost like a cup and handle or a deformed handle, if you will. And if we get broke the little flag yesterday, and it's got the resistance up there at about 76.49. You already talked about Apple. Another one that looks really kind of promising that I'm keeping my eye on is DDD. It's not ready now to be bought, but I'll be watching after this initial thrust off the bottom, be looking for a nice little pullback, at average to above average volume. So that's looking good from our perspective, Dave. And I don't know if all those are on your list or not, but
yeah, most of them are or have been. Yeah,
or have been. Okay. So let's take a real quick peek before we start getting. And so, Jerry, let me address that as soon as I show the last screen. Let me put up the next slide, and I will address it. Jerry indicates, Dave, that he has been does the. Well, let me ask you: does the site take credit cards?
It does, yes.
It does. And so this is just a reminder about the so Jerry, it does take credit cards. I know that it flips you, it takes you over to a PayPal type of account, but as far as, and I know on PayPal it does also take credit cards.
Yeah, so PayPal processes all our payments, whether you pay with a PayPal account or with a credit card. So when you get to the PayPal order form, if you just want to pay with a credit card or a debit card, just there's a link there that you can click on to go that route. But the payment will be processed by PayPal. So that's why you have to fill out that order form.
And then one of our California people wanted to know if the $49.99 includes BAM dues, and the answer to that is, Dave, you know the answer to that?
I don't.
The answer is no. BAM is the Bay Area Moneymakers is a totally separate entity from All About Trends or Active Trend Trading. So this is just a reminder about the All About Trends Active Trend Trading Combo Special. It can also be found at Market Tech Talk, which is my YouTube channel, where I post the recording of this show afterwards, and you can find it right here. If you click here, it takes you right back to the Market Stock Talk page that Dave is talking about. And so, but if you are going to the this channel to watch the video, please leave a comment, and just, if you like it, put a like by it. And then secondly, Dave and I would love, and we'd appreciate if you, would share Market Stock Talk with your friends. And also, and I didn't have time to put a PSSS, but Dave and I would love to come and make presentations to any group that you might be involved with. So if you are involved with a group, please, please feel free, if it would seem appropriate, we'd love to come and make a presentation to your group. So there's the flash on with David's number, my number, David's number 408-627-3455, and my number is 808. Dave, is that the right number?
Yeah, it's actually 3435.
3435. Okay, I will correct that. And then my number, guys, is 808-366-0397. Yes, that is a Hawaii mobile phone number from when I used to work with the phone company over in Hawaii. And so no matter where I am, at least my phone in my heart is in Hawaii. So that's it for this evening. We will answer questions about individual stocks and any other questions we can answer. But David, thank you so much. It's always a pleasure to work with you.